Welcome to the latest episode of The Financial Frontier. I'm your host, Patrick Camuso. I'm very excited to introduce our guest today, Jeremy Nau, a partner at the network firm. Jeremy, thanks for joining us here today.
Yeah, thanks for having me, Patrick. Looking forward to getting to a topic and passion or area that we're so passionate about.
Absolutely. So to get started, can you tell us a little bit about yourself, your company, and how you found yourself in Web3?
Yeah, me myself personally, I fell down the crypto rabbit hole about 2017.
Nice.
After I graduated college, I was, like many kind of young professionals, I started, finally getting a little bit of money, right? My staff salary. And I'm like, hey, what's the first purchase I'm going to make, as an adult? So I was like, all right, I better start saving up for a house. So that took me down this rabbit hole of, okay, well, there's these big booms and busts. There was 2008, kind of scarred from that whole time period during my life. So I was like, oh, well, maybe it wouldn't be all that bad if I was able to time like a downswing. So I'm like, okay, well, what causes these swings? So I started learning about interest rates. And then I realized, wait a second, well, how are these interest rates determined? I thought it was just between myself and the lender or, myself and the counterparty. But all these interest rates actually use a reference rate or the risk-free rate. So that got me down the rabbit hole of learning about how the Federal Reserve works, how the banking system works, and the history of money and how money generally works. So that's what ultimately led me down the journey of personally kind of crypto and digital assets, stumbled upon Bitcoin and thought, wow, this is actually like a whole new way of I realized money is just actually an accounting ledger of kind of who's provided value in society, right? It's just tallies on the scoreboard of who's provided value. And digital assets are in crypto, and Bitcoin specifically is a new incorruptible ledger of who can maintain those tallies as to who's provided value to society. So that was my personal rabbit hole. Professionally, I was lucky. I was at a firm in Silicon Valley. We were auditors of some big crypto companies like Coinbase back in 2017. They realized that these audits were not just like your normal audits. You can't go to a bank and confirm bank balances. So I raised my hand and said, hey, you're probably going to need a crypto expert or someone that's really delving down the rabbit hole. And I was able to gym myself onto that engagement as I think I was a manager at that time. And then I was, tapped as the crypto guy at the firm ever since. And then after FTX, our firm pulled out of the space. And that was the impetus for myself and a few other of us to create the network firm to focus solely on the digital asset industry.
Very nice. That's an interesting backstory there. So you're heavily focused at the network firm, and I guess in your career in total as an auditor, although I believe you guys offer other services. So the role of audits in crypto companies is often misunderstood, I think, industry-wide. Could you sort of explain why auditors are so critical in Web3 and, especially in terms of ensuring completeness, accuracy, and valuing these crypto assets? Can you speak to that a little bit?
Yeah, sure. I mean, if we think about what are the points of audits, why do they even exist? Well, the point of an audit is to provide independent, accurate information to certain parties about your financial position as a company. So usually who's ingesting or reading those audits are investors, or maybe your vendors or some regulators. So for crypto companies in the US, they usually need the audit. Usually it's for the MTL licenses, the money transmitter licenses. Yeah. So of course, part of that whole audit process is making sure that the books and records in total, not just the crypto parts, but crypto can be it's the new kind of more complex part. But part of that's making sure that those are complete, accurate, with the end goal of giving that user kind of funny or accurate information. And if you don't have a third party, like an independent auditor, the chances of kind of those parties getting unbiased or inaccurate accurate information is pretty low, because not always because of fraud, but because a lot of companies, and especially startups, they're just not the best. They haven't had their focus on accounting and maintaining clean books. So that's another reason why auditors are important, is because it help companies, just get them accurate
Yeah, I agree with that. I see that a lot just in the Web3 space in general. Accounting is not the highest priority for a Web3 company, especially when they're first starting to build that company up. So,
100%.
as Web3 companies start to grow and mature, and they have to, start to get themselves up to a new level of sophistication where they can start dealing with auditors and actually successfully go through an audit. What steps do you think they should take before that to get themselves audit ready? Like, are there certain things that they can do before they're speaking to you and going through that process?
Yeah, certainly. Companies are at different stages, so oftentimes people will assume like, oh, go through an audit readiness process, almost like they're a huge company that has been around for a while, and you just have to prepare. Like, oh, my annual audit's coming up, I should prepare. But like, that's not how things usually operate in practice, right? It's usually like a technical co-founder or set of co-founders. They haven't really thought much about accounting. They're more about survival and making a company, right, survive at the beginning and hopefully scale. So kind of from that perspective, right, what are practical things like these co-founders can do, or these founders? Like early on, like when you're getting started, you're not really focused on the accounting, you're focused on survival, but just don't mess things up. So how can you just not mess things up? It's just try to keep as much evidence and as good a records as you can as possible at the beginning. Just don't like lose anything, right? And then try to do your because you're going to create bank accounts, right? Probably for your company. Try to keep that clean, right? Don't be sending bills from your personal and doing all this stuff. Try to do everything like siloed in a way that can be easily tracked, because that's going to help your accountant or whoever, eventually is going to help you out, clean up your books. That's going to help them out a lot, for sure.
Absolutely. Especially for early stage Web3 startups, I see a lot of commingling on my side as well between, personal and business. And a lot of times when companies are first getting started, they're not realizing that, they have to have exchange accounts set up under their EINs, dedicated non-custodial wallets established for their companies. And like you said, that could create accounting and audit nightmares for businesses that, you're going to have guys like us unravel for you, and it's no small task.
Yeah, and it's bringing into scope like your personal bank account. Now I have to parse through your personal bank account to make sure that it has nothing related to your company operations. So for your own security, right? For your own for your own privacy, keep them separate if you can. And then eventually, like, you have to be honest with yourself. Like a lot of technical co-founders, they're very smart, engineer driven, but you have to at some point realize that maybe the accounting has gotten a little bit farther than you can handle yourself, right? So consider hiring someone internally or hiring an external firm, especially as you're getting audit ready, to kind of prepare things. And then it's probably a good idea to implement certain processes. When you hire that person, direct them to like, hey, have a month-end close process. Maybe start documenting your policies. Consider a crypto sub-ledger. Like, there's kind of, as you get farther along, these are the things that I would say, like, don't mess things up. Probably get someone with accounting expertise, and then get audit ready with these policies and subledgers and all that stuff.
Absolutely. And what advice would you give companies when it comes to internal controls? Because that is another area where I think, Web3 companies can run into a lot of issues.
Yeah, I think this is also another place where, if you maybe go to some bigger firms or just someone with an expectation that, hey, you're a company, you should have everything in place day one. Like, that's just not practical, especially for startups and crypto companies, right? So like, it's like, what do you need to worry about first? Like, worry about those core things first in your operation. Like, if you're custodian digital assets or you manage smart contract keys or something like that, like, obviously that is the main thing for your business. Like, focus on those controls first. Crypto custody, maintaining your private keys. Like the CCSS, the cryptocurrency security standard, has a pretty good framework of controls that can, help you implement those. Like, that's what I would focus on first. Then as you scale, right, layer on additional controls, maybe in your financial reporting processes and all that stuff. And then what you can consider too is like, a lot of these platforms, they could benefit from like a SOC 2 or SOC 1. That could be a good forcing function for you to like implement controls, because oftentimes we don't do a lot of things until we're forced to do it. So that can be one of those functions for you to kind of take the next steps.
Absolutely, absolutely. So I think another process in the audit process that you're dealing with a lot is verifying wallet ownership for the wallets that any given company owns, and this can be somewhat of a cumbersome process, and sometimes it could even cost the company money, depending on how you verify the ownership. So, could you walk us through, how you approach that and how you go through that process of confirming wallet ownership?
Yeah, there's a few different ways that you can confirm wallet ownership. And what we're trying to do is we're trying to confirm that you can control the associated private keys where assets, are controlled as well, right? So it's about control for the most part. So how can I prove control or prove that you can control them? Well, there's different ways. How most auditors started was saying, hey, let me log into your wallet software, let me see the assets, and then maybe send some or all of your funds somewhere else and send it back. We call that like send to self transactions. That proves that you can exert control over those funds. That's one way to do it. What we've over time, or as more auditors get into the space and they get more comfortable over the cryptography, is using digital signatures. And the reason why digital signatures are so nice is that they're much more scalable. Like now, I can prove that I provide you a message, and then what you do is you take your private key and sign that message and give me the digest or the output. Then I can verify it on my side with some code. And what's nice about this is that it's cryptographic, like it's pretty much 100%, 99.9999% assurance that you could control that private key. And it's much more scalable. Like you can do this for millions of transactions at once, or millions of addresses at once. And when you're auditing an exchange, like that's what you need to do, right? They have a lot of addresses. So those are the most popular methods. Now things get, a little bit more complex with like multi-sigs.
Yeah.
And can dive into that if you'd like, but essentially you have like a multi-sig that's made up of 3 shards, for example. Like now you have to prove ownership of a quorum of shards, and then prove that you can, when you compile those, they actually equal that multi-sig. So there's methods to do it, just a little bit more complex.
Definitely. So you, in addition to the network firm, you guys have released a software called LedgerLens that I believe your firm uses for the audit process that you're conducting with companies, and it's also available to other firms as well for them to manage their audit processes. So can you sort of give a little bit of the backstory on that, and what problem are you solving with LedgerLens, and let's get into that a little bit.
Yeah, I mean, LedgerLens came out of us needing to scratch our own itch. We were going through these audits and we realized that you're going to need special tools to be able to actually complete these. So originally we were building all these disparate tools, like, just kind of ad hoc, let's just get through this audit. But then we were like, okay, well, internally, let's put these in a nice package. And then we realized that only the biggest firms are going to have the resources that they need to be able to build all these tools, hire developers, run nodes, do all this stuff. Like, this is not going to be practical for 98% of firms, probably. So we realized, well, in order to have a healthy digital asset, we think all assets are going to be digital assets. So what are all these firms going to do when this comes up in their audit? Well, they're going to need some specialized tools, right? With people that understand their pain points, that have gone through the challenges before them. So that was why we actually built LedgerLens. And like you alluded to, right, we use it internally, but we provide this to other CPA firms. For us, it's nice because it's software as a service, different type of revenue stream for us, and ultimately that's where we want to go. Is right, we want to use our expertise to build revenue that way, and in the meantime, enable other firms to be able to service the space to create a whole healthy ecosystem for auditors and for digital asset companies.
Absolutely. So can you explain some of the features of LedgerLens, and how is it assisting your company and others in the audit process? Like, what are some of the cumbersome tasks that it's facilitating and streamlining?
Yeah, it's similar to some of those problems that I was outlining earlier, where it's like, hey, if an exchange has 1 million addresses, how can I do that in a scalable way? So LedgerLens solves that. Essentially, we can ingest 1 million addresses at once. You can pick a block height, right, to get a balance, which is very unique, and return those balances as of that balance sheet date. Right. So going back in time, like for Solana or for Tron or whatever, like that is not easy to get. So especially for 1 million addresses. So that's like our core kind of auditor workbench feature. We also have kind of the proof of ownership tools that we talked about with the digital signature verification. But what we're really, really curious and excited about is that we've built tools for the future of the profession. And we don't think many of them know it yet, but they're built and they're ready for when they're ready. And we've done a few of these engagements, but like Merkle Tree Proof of Reserves, like Wyoming, Texas, other jurisdictions around the world are adopting proof of reserves using Merkle trees. Auditors are going to need to know how to use these tools, right? And build these tools. So we built it for them. We think off-chain data for all these RWAs and tokenized assets, that is a black box. Well, not if you have LedgerLens to publish that data on chain. Auditors are in a perfect position to provide that role in society going forward. So we've built out those tools. So we're very excited as we think this is going to evolve over the next, decade.
Yeah, that's very interesting. Very interesting. So you've built this now, for sort of some immediate needs, but you're kind of anticipating, what technological innovations auditors are going to need in the future. And you see that trending more towards verifying data with these real world assets that are off chain as one of the big targets for that, it sounds like.
I mean, what is it, like Citi, BlackRock, they all say, it's going to be 10 to 30 trillion of assets are going to be tokenized. Well, how, there's this digital representation of an asset, but how do you know the actual asset is there?
Exactly.
Who's going to do that? Hopefully it's auditors, and hopefully we're doing it more frequent than, once a month or once every 3 months. We can do that faster and more real time. So that's
absolutely. And that is, this sort of, to me, seems like, the evolution of the role of an auditor as we're starting to bring these transactions on chain. Do you foresee, the evolution of audit practices for digital assets changing in any other way? Or do you think like that's kind of like where you guys are planting your flag? It's like with these real world assets, verifying all of that data, proof of reserves starting to get more traction. Is that sort of where you see the puck going?
That's one of the big theses for sure. It's RWAs and tokenized assets like stable coins. Also, there's going to be strong custodial relationships, whether we like it or not. So it's kind of proof of reserves in that other type of way, right? Instead of a tokenized representation, backed by off-chain information, the exchange context is, it's like a platform database backed by assets on chain. So building tools for that as well.
Very interesting. Now, obviously, we're still in the pretty early stages with Web3 and digital assets in general, especially I think from a regulatory perspective. We're just starting to see that environment increasing complexity and the speed at which it's changing, I would say over the past year or so, maybe 2 years. Time does fly. So, with these regulatory frameworks still developing, how do you sort of see the next stage of the evolution? Are there any things that you're sort of anticipating or watching for in particular?
Well, I think we'll get some clarity, and then I think it's going to be fully integrated into TradFi. Like we're seeing that right now with the ETFs, with the new options markets, all that stuff. Like eventually all banks are going to provide this service. Yeah. And they'll probably start offering like DeFi services. I think it was a tweet I added like a few years ago. It's like banks will be front ends for DeFi protocols. And I think that eventually will happen, especially as the yields in DeFi, can offer different opportunities. So I'm curious to see how that evolves. Of course, we think proof of reserves legislation for tokenized assets and exchanges, like that's going to be, big. We're seeing that in like Wyoming, Texas, and then even the strategic Bitcoin reserve draft law had a proof of reserves clause in it. So that's a whole nother interesting track of these strategic reserves, which will be fun to watch too. But that's our main theses that we think will play out, and it seems like it's going that way.
Absolutely. Very interesting. So, another thing I think you mentioned a little bit further back is that you believe basically all companies are going to be holding digital assets in the future. So what does that really mean for, CPAs and CFOs? Because right now there's only a small percentage of us that are really involved in this space. And basically there's going to be, an imperative for all firms to be learning this in the future. So how do you think they're going to be able to sort of, clear that learning gap?
Yeah, they're going to either, I forget who said it, but there's like 2 ways that you learn. It's through pain or curiosity. So you can learn through pain, or you can learn through curiosity. Take your pick, right? Because if this plays out like we're all digital or all assets are digital assets, we're seeing it with so many of these companies now. It's almost like every day I see a new announcement where someone's alluding to like a Bitcoin on their treasury or on their balance sheet. Like this is happening slowly but surely. So if you have your options, pain or curiosity. Now,
Exactly.
what's great is there's a lot more resources than there used to be, but take your pick.
Absolutely, exactly. And it looks like, the firms that are still out there ignoring it are, kind of choosing by default the former rather than the latter, unfortunately. Because I agree with you. I think, as we start to see more institutional adoption and even adoption at nation state levels, this is going to just permeate the whole entire financial system. And it's going to be hard to take on a client that doesn't have some form of crypto on their balance sheet.
Yeah. I think the Overton windows shifted a bit, like compared to maybe like 3-4 years ago. Like the narrative that was still dominating was, crypto still kind of for criminals and all that stuff, but that's totally changed the last year or so. Now it's Wall Street, nation states, so I think that's going to be the cover that a lot of risk committees and all these firms, they're going to be like, wait a second, like we have to get into this, and it's the risk is worth it versus having that stigma before. I think that's gone.
Yeah, and it's interesting for me to watch in real time. I'm sure it is for you with your background, because it has went from this sort of nascent technology that a lot of people sort of push to the side, and now it's really entering this new stage of maturity where we're starting to really get acceptance from the wider financial industry as a whole.
Yeah, I mean, Larry Fink, all these big names now are the new administration. A lot of them are Bitcoiners. Like it's pretty crazy to see the acceptance these days. So yeah, I think it's inevitable.
It's a new world that we only dreamed of back in 2016, 17 timeframe. So
I know that's what I was thinking. Like, oh my gosh, like when we were reading The Sovereign Individual in these books, like 8 years ago, it always talked about how it'll play out, and it's crazy how prescient a lot of those books really were.
Absolutely. Yeah. The Sovereign Individual, really, because, it predicted a lot of this stuff before even Bitcoin existed, which still blows my mind to this day. So Jeremy, for, all of the CPAs and CFOs that are watching out there, and maybe, they're just starting to build their expertise when it comes to Web3 accounting and crypto taxation, whether they own their own firm or, maybe they're within a firm and they want to sort of, build up that expertise within the firm, where sort of how you started your career in this. Are there any recommendations you would give them in terms of like how to bridge that knowledge gap and some resources or some learning strategies for them?
Certainly, yeah. You can definitely start with kind of our websites, right? We have the networkfirm.com and LedgerLens. We have blogs. We also have a YouTube channel now where we talk about subjects kind of like this, because it's very, a lot of people aren't talking about it, right? So it's still pretty niche in this area. There's also like these, like the subledger tools. They often have like academies, or they have a lot of good resources. So I definitely check out their websites, like Bitwave, Cryptio, CryptoWorth, something like that. They've got some pretty good tools out there.
Absolutely.
Yeah. And then now there's like these clubs too, right? Like Web3 CFO club. Like, I mean, there used to be like the people aspect was lacking, but now kind of the network is coming there too, which is pretty cool.
Yeah, definitely. There's definitely, I would say over the past year or so, maybe year and a half, there's been a lot more professionals that have come into the space, and there's a lot more networking opportunities like you're alluding to, which I think is great, because the more professionals that are sort of putting their time and attention and mind share onto this, that you can have candid discussions with, the better professional you'll become in this space as well. And I'll also point out that there's not one place you can go to learn all this. You need to have a fundamental understanding of accounting, taxes, and then the whole entire Web3 industry as a whole. So you need to be taking information from as many sources as possible, kind of how Jeremy was alluding to here. So Jeremy, I really appreciate this discussion today. Where would be the best places for people to contact you individually, and then to contact your firm, and then also to contact LedgerLens as well if they want to review your software?
Yeah, you can always reach out to me at jeremy.now@thenetworkfirm directly. You can also go to our websites. We have booking links and all that on thenetworkfirm.com and ledgerlens.io. We're on Twitter and all those places as well, but those will probably be the best places to reach out to me. And we're pretty responsive, so feel free to give me a ping and look forward to hearing from you guys.
Absolutely. So to everyone that's been watching today, I hope you took some valuable insights from this conversation. And I want to again thank Jeremy for being our guest. I encourage you guys to go and reach out to him, have a conversation with him. He'll be very open to speaking with you. Until next time, I'm Patrick Camuso, signing off. One sec.
Sweet.